So here's the thing with the stock market. If you own stock in a company, you actually own a tiny little piece of that company in what's called a share. And one of the greatest things about owning stock is that some of these companies share their profits with their shareholders through dividends. Most companies will issue dividends 4 times a year or once every quarter. So essentially, if a company pays out a dividend 4 times a year, you're going to get paid 4 times a year just for owning that stock. So let's pretend that you own 100 shares in Ford Motor Company, and they declare a dividend of 15 cents a share. Well, with those 100 shares being 15 cents a piece, you're going to make $15 right then and there just because you own 100 shares in Ford. And that's only one of the payments. They're going to pay you another 3 times during the year for owning those shares as well. And a lot of the time, the dividends will actually go up a little bit over time. Here's something for you. Warren Buffett owns 400 million shares of Coca-Cola. And Coca-Cola's last dividend payout was 37 cents a share. So in that quarterly payment alone, Warren Buffett would have received $148 million just because he owns that many shares in Coca-Cola. So you see why dividends might be worth considering? Now keep in mind that dividends are not guaranteed. The board of directors might at some point just say, we don't want to do dividends anymore, and so you as a shareholder won't be receiving them. Just do your research on the company's dividends before you invest in them. Check the history of the dividends, so how long they've been issuing them, how much and if they've gone up. All those kinds of things will help you make an informed decision on whether or not you want to invest in that company based on their dividends. Here's an example of Coca-Cola's dividend history. Apparently, they've been paying out dividends since 1970, 4 times a year, all the way up until today. So I would bet they're probably going to continue doing so in the future. So how do you know if a company pays out a dividend? It's easy. You just have to check some quick stats, and then you'll know right off the bat if they issue a dividend or they don't. So the first thing you got to do is you got to figure out what the company's ticker symbol is. So what the heck is a ticker symbol? The ticker symbol is just the company's name on the stock exchange. For example, Coca-Cola is just KO, Ford Motor Company, F, Apple Corporation, AAPL. If you're worried that you can't find the ticker symbol, just Google it, you'll always find it. So I'm going to use Ford here as an example again. Like I said, their ticker symbol is F on the stock exchange. Now I'll quickly show you inside of my Robinhood app what you're looking for when it comes to a dividend with Ford. You see on the bottom right how it says div yield? That right there tells you that they pay out a dividend. So what does yield mean? Yield is actually really important because that's the percentage of money that the company's paying you on a yearly basis based on their current dividends. So the 4.95 that you're looking at means that Ford is paying you 5% in dividend yield for holding their stock over the course of a year. So just for owning stock in Ford, they're going to pay you 5% a year in dividends. And every single company on this entire planet is trying to make a profit, including Ford. So you're also assuming that their stock is going to go up while you're receiving dividends. So how do you know when a stock is going to be paid out? You just have to check a few things that I'll quickly go over. The first thing you've got to pay attention to is the declaration date. All that means is that the board of directors got together and they decided that they are going to pay a dividend, how much it's going to be, and that it's been declared. Now the next thing you got to pay attention to is the ex-dividend date. The X date is really important because you've got to make sure that you own the stock prior to that date in order to get paid a dividend. So if you want to take advantage of the dividend, but you don't own any of that stock, then just make sure you buy the stock 1 day prior to that X date. That's all you have to remember. Just buy it 1 day before the X date and you'll get a dividend. Now once you've done this, you just have to pay attention to the record date. The record date is going to happen 2 days after the X dividend date. All this means is that all the shareholders at this point have been recorded to receive their dividends. And lastly, all you're looking for is the payment date. And that is the magical day that you'll get paid your dividend. It's really easy. Just make sure that you pay attention to these 4 little things and you can get your dividends. And one more thing with this. When I first got into investing, I thought that if you bought into a stock right before the X date, then you could get paid a dividend, and then right after that, you could get out of the stock so you could quickly make some money. To keep things fair and honest in the market, that tactic doesn't work. Every time a company issues a dividend, the stock is going to drop by that amount so that it's fair. The stock will mostly rebound back up, but it's not going to happen right on the X date. Now there are pros and cons to dividend paying stocks and non-dividend paying stocks, and I'll just go over a couple of those really quick. Now, the great thing about dividends is that when you get paid, you can reinvest those into the same company, or you can buy shares of other companies, or you can buy lunch with the money. That's what's so great about dividends, is that you have your choice of what you want to do with that cash. Keep in mind that dividends are typically paid with really stable companies, and that's because their growth is usually slowed down a lot so they can pay you with some of their profits. So typically when you own shares in a dividend paying stock, you're not going to see the stock go way up like big growth companies do. Companies that don't pay out dividends are using that money to reinvest in their company. Therefore, they'll typically have a lot more growth than dividend paying stocks. And sometimes that growth far outweighs a dividend payment, especially when they're growing like 50, 100, 150% a year. Those kinds of gains are insane compared to anything you'll get from dividend paying stocks. But with those kind of gains comes risk. There's always going to be risk when it comes to investing. But when it comes to dividend stock investing, there's a lot less risk over there than there is in the growth stocks. I like both types, but honestly, dividends are awesome. Hopefully by now you know what dividends are and what they're all about. If you don't, then I did a really terrible job making this video. The bottom line here is that dividends are incredible, but there's still risk when it comes to investing. So do your own research, and I'm sure you'll be just fine. I'm Jason with the Honest Finance channel. You just got a ton of information on dividends. So take that information and do something with it.